Hey viewers, welcome back to the latest episode of RHO Market Chat. In this week's episode, we are going to recap on the major indices trade plans. Robin is going to explore with us on FAANG companies, their roles and their influence on the major indices. As we know, this week is a crucial week where all the big tech companies are announcing their quarterly earnings. This is essential as the results of these big tech companies have an influence and sets the tone for where the major indices will be heading in the upcoming several weeks. Furthermore, Robin is going to update us on the ongoing COVID situation. So without further ado, let us present Robin to this week's market chat.
Hi everyone, it's good to see everybody back again. I hope you have been enjoying this weekly series of RHO Market Chat. Well, this series of RHO Market Chat is really designed for you as retail trader and investors. We hope that through this series, you can get access to professional views and professional market analysis, and also information and materials that as retail investors is hard for you to get hold of. Well, let's start. Like what we always do, we do a market recap. So last week, if you have been following this series, I spoke about the trade plan. I showed you the trade plan of major indices like Dow Jones and S&P. And I was saying really that after a very steep fall in a Dow Jones, like 38% fall, and rebounding off from the March low to 33%, the Wall Street indices, by and large, will be trading on a sideways mode for probably the next 1 to 2 months. All right, so let's take a look at the trade plan that I've showed you. See, so this is the trade plan I've showed you, and this is where Dow Jones has fallen 38%, rebounding, and that is very normal in a market cycle. Indices falling so hard and so fast, and rebounding like 30% from the bottom is normal. And we will expect the market now to go into a sideways. And what I really said was the market hit a very important resistance level at 23,800. And and I said last week that this 23,800 is an important resistance. And when prices goes there, it will keep bouncing off from 23,800. Let's see whether it really happened. Look at this, all right? So this is where we were last week. Since Tuesday, after I spoke on Monday, the market came down below 23,800 and it came off even further. And then when it rebounded, see, it is resisted at 23,800. So this trade plan is pretty good. And we should be following this trade plan that has been working. All right, let's come to this week of market chat. So this is a big week, all right, for tech stocks, particularly the FAANG stocks, all right. So what are the FAANG stocks we're talking about? FAANGs, the F stand for Facebook, the A stand for Alphabet, another A stand for Apple, another A stand for Netflix, and the G stand for Google. So for some of you who have never heard of FAANGs, they make a very, very substantial and important part of Wall Street indices. So this is where, I want to explain to you a little bit more. All right, look at this table on my right. And this is the component of S&P 500. And S&P 500 has got 500 stocks. And in the 500 stocks, this FAANG stocks makes a very heavy wastage. For example, Amazon makes 4%, Facebook, Apple, Alphabet A, Alphabet B, and Netflix. All right, they add up to 10%. But if you include Microsoft and Apple, all right, the weightage will come to 21%. And look at NASDAQ, all right? So NASDAQ, it's even, the FAANG stocks is even heavier or make a bigger part of NASDAQ than S&P. Look at that. I mean, if you add up Amazon, Facebook, Alphabets, and Netflix, it's 24%. But if you add on Microsoft and Apple, it is 47%. Did you realize that? You know, that this FAANGs make a very substantial part of NASDAQ, and when the FAANG moves, NASDAQ moves, and yet it's only a few stocks that is causing the index to move. So observe the FAANG company are very heavily weighted in S&P and NASDAQ, and if you add in Microsoft, and if you add in Apple, all right, you get a much heavy weightage. All right, so let's look at this relative strength chart. You see the FAANGs has been the market leader for the last 1 month. Since the market bottom in March, all right, the FAANGs has been market leader, and in terms of relative strength, the next leader has been the Chinese stock market, followed by the S&P, followed by the Hang Seng, followed by the Dow and the STI. So if you need to be bullish here at the start, if you have spotted this relative strength, your obvious choice of investing and where to put the money has been in FAANGs. But I think the FAANGs has run up quite a little bit. Although it's still the market leader, it could be due for a correction. So this is what this week's Market Chat is all about, is to get you ready and help you to see over the horizon what is happening. So just now we compared FAANGs to some of the major indices, and you could see the divergence of S&P and NASDAQ as it continued to rebound. But what I want to let you see in this slide is, while the FAANGs has been the market leader, the smaller guys are not following. So who are the smaller guys? All right, the smaller guys are the Russell, the companies that's listed on the Russell, and there is about 2,000 companies that is listed on Russell, and they are not following. So what is this this market rebound since March is telling us? All right, it's telling us that this rebound, all right, may not hold because not everybody believes in the rebound. And this rebound is really caused by a small basket of stocks. And the smaller folks, all right, they're not believing in it and they are lagging. All right, so should these 6 companies, FAANGs, Microsoft, Apple, Photo, it could prove to be a significant drag on the overall market. So you have now, you have to be very, as you are investing now, and the FAANGs has run up a lot, it's important to be watching the movement of the FAANGs. All right, so this week is a big week, all right? And I've been telling people that this could be the inflection week. And why? Tomorrow, Alphabet or Google is going to report results, and that is on Tuesday. So on Wednesday, Facebook and Microsoft is going to report results, followed by Thursday, Amazon and Apple. So these are the big guys. These are the stocks that's heavily weighted in the market, and they have ran a lot. But then if they disappoint, there could be consequence in the market. So earning of FAANGs plus Microsoft and Apple likely to dictate the tone of the market for the next couple of weeks. Any missed expectation on the performance of the FAANGs and the MA companies could lead to another round of global market decline. But on a positive note, if they do better than expected, and the views of a better economic landscape could help us push price even higher, and this could result in a gap between, or even a bigger gap between, the S&P 500 and other segment of the market. All right, so the implication of FAANGs and the MA companies on the market, this company are by far largest, all right, in terms of market capitalization in the US, and have the means to survive the current downturn. And this is almost certainly the one of the main factors driving investors to flock into this four stock. But it also means that anything that may go against that belief could send this stock and the market down very quickly. Let's take a look at Amazon. All right, Amazon has been on the headlines. Why? Because this is one of those tech stocks or NASDAQ stocks, right, that have broke its all-time high. And you know the reason. A lot of people are going online, and Amazon is doing an incredible business. So Amazon amplifies another dominant trend, and the premium being placed by investors on the acclaimed winners of an even more winners take all economy that might follow this downturn. So Amazon now represents about 1.2 trillion market value, all right? And like what I said before, all right, it makes a very big part of the S&P, and especially, right, it makes 40% of the S&P consumer discretionary sector. Well, of course, just because the market is leaning on the steady growth business rather than the outright positioning of a better economy doesn't mean that this team can carry the market indefinitely higher. All right, so this team, all right, has been, all right, carrying the market since March, and it has been leading the market. But everything that goes up has to come down. So this is where we are here to give you the insights of what to look out for. And at some point of time, right, the extreme reliance on this mega cap growth leader can go too far. All right, so let's examine now. So I talked to you a little bit of fundamentals and what's going on with the FAANG stock, but let's look at the charts, all right? And one chart that, you know, I got a little bit cautious when I look this chart is my trade plan on Amazon, all right? So when Amazon rebounded from its low in March, right? So on my trade plan, I could see that this here at 2456, all right, 2456, all right, is the peak for Amazon at, and this level actually hit about last week. I mean, Amazon hit my target. So that's what I get a little bit cautious, and because I believe that Amazon could be in for a correction very shortly, and it could mean this week. All right. So if they report better than expected results, fine. You know, they could, you know, go a little bit more higher, but not much higher. All right, Apple. So the chart of Apple doesn't look very good. All right, it doesn't look as strong as Amazon. So what you could see here on my chart, right, is that Apple has hit the resistance on a 100-day moving average, but it is supported, all right, but by the 200-day moving average. But what is really important to be looking at the trend of Apple is that Apple has broken off from its uptrend. You can see here it's broken off from its uptrend, and it is rebounding into the resistance, all right, at 288. So I expect Apple to go from here is that it could rebound to 288 and come off to do a double top. But if the results is good or better than expected, all right, it could break 288 and go to 295. But expect Apple to trade within a range like here, all right? So the support at 255, resistance to 88 to 95. So the Apple chart don't look as strong, but it is also due for a correction. Let's look at Microsoft chart, all right? So Microsoft, a big guy, heavy weightage, and this top that it made at 188 back in February, it could retest it. I do not know, all right? But what I do know is that Microsoft could trade within this range, 188, 180, all right, 163 and 153. So in this phase of the market, traders and investors need to know that they cannot be in for long haul or for long-term investments. They need to switch to a tactical play. And what is a tactical play? A tactical play is one where you sell into resistance and you buy into support. All right, a little bit of COVID updates. For those people who are positive about the COVID situation, this is what they've been looking for, and this is what that has been driving the market a little. Okay, so what we are seeing slowly is the trend of companies getting ready to lift restriction on the various state of lockdown in their economy. All right, so this lockdown is causing a lot of economic pain, and a lot of countries just cannot wait to get out of this lockdown. All right, for example, just recently we have New Zealand returning work tomorrow. All right, Australia plans for a partial lift effort this week. And New York, right, has announced protocol for a mid-May reopening of some US states already tentatively open. And news from the Europe, all right, a lot of hotspots such as Italy, Spain, Germany, and the UK are planning partial reopening or will be doing so this week. Well, so what is the negative going forward? All right, the negative going forward is that if they are not careful and if they open the economy too soon, it could prompt a second wave of infection that could be more deadly. And if a second wave of infection comes, this is where the economy will sink further, and you would expect the index to test the March low. So many economists say that they are trying to stem the current economic blow at the expense of public health, stands to make the second wave, all right, worse than both a health and economic standpoint, and is potentially set up rolling waves and ongoing devastation. All right, so this is the end of my presentation. I hope you like this week of the market chat. Look out, all right, for this week of earnings. A lot of excitement coming out starting from Tuesday all the way to Thursday. All right, happy investing, stay safe, stay healthy. Bye.
Okay, thank you viewers for your time. This is the end of this week's episode of RHO Market Chat. I hope you like this episode, and if you do like this episode, please share it and subscribe to our channel. We'll see you next week.